I would like to review 3 trades that set up today. I called them with some of my members. Today is July 29th, 2008. It's Tuesday. What you're currently looking at is the dollar JPY 30-minute chart. Here we have the fulcrum for the day. It's very important to keep track of where these fulcrum levels are. So what we have here is an A, a B, and a C. Here we get a continuation signal candle. To be able to correctly identify the continuation signal candles the way I do it, it takes a bit of practice. It really does. I've got a couple of videos that explain how to find the continuation signal candle. But the first level I wanted to make sure was cleared is the fulcrum for the day. But this was the candle that we chose to trade off of today. You do see a bit of CCI divergence, but this candle, this particular candle that's set up, closed on the hour. So now we need to go to the 1 hour chart. Okay, this is our 1 hour. This is that high at 59 that we were trying to identify and wait for the closed candle up above. Here we have that closed 1 hour candle. Here we have no CCI divergence. CCI is pointing and MACD, everything's moving the way it should be on these indicators. So let's go back to our 30-minute chart. Now I use this 30-minute chart to try to show any short-term resistance, and if we're headed in a down direction, any support, but also trying to keep an eye on some of these pivot points to see if they line up somewhere that makes sense. So our entry on this particular trade was 107.67. I anticipated a possible pullback, but I went ahead and took the entry on the next candle. You'll see that there's a small pullback there. Usually we'll get a pullback sometimes to old resistance in this case. Sometimes it'll go a little bit through it. Our first target was 90, and then the second target was going to be the 108.00. This is a major psychological level and just before the resistance level. And if there isn't any news that might affect this particular pair in a dramatic way at this moment, I want to take realistic profit targets. Now, stop loss levels. Stop loss levels were at 47. That's the low of that candle right there on that small dip low or swing low. So we've got an entry of 67 and we've got a stop loss of 47. So we're looking at 20 pips plus the spread. So about 22, 23 pips. Now, the first target was going to be 90, so we're looking at about 20 points with this, not including the spread, for the first target. And if we get to 108, we're adding another 10 points to it. So this was a relatively safe trade. We get our pullback. Take it to 90. Here's 90. This candle went to 95. So we close our first half at 90. So we go from 67 to 90. So there's about 20 to 21 points. And then we would be looking to pick up another 10 more points if we take it to the psychological level of 108.00. Now, this particular candle was news driven. So I was able to inform members as the news was released at 10 o'clock New York time, which this candle was. This was the driver. This was the momentum. This is what moved it to our final target. I traded it to 12. Some other members traded it to 20. So I picked up another 22 points. So I picked up 20 on my first target and 22 on my second target. So from entry to final target was 40 or 42 pips. I don't double count. I don't include how many lots. I don't times it by the number of lots I have open on this particular trade. So that's how this trade worked out. So again, this trade paid 42 points from entry to final target with a 22 or 23 pip stop loss. This is the pound dollar. This is a 30-minute chart. This was also news driven. Now, this was a little bit different compared to the dollar yen. So we're looking at economic data for the United Kingdom. So what I need to do is understand economic data. It's very important to use fundamental principles and fundamental analysis along with your technical analysis. This was all news driven. So our entry on this particular trade was 99.16. We watched and waited for price to come down. It did take off quickly after the news was released, but about a minute later, I was able to identify a small pullback. We had 99.16 as an entry. Our first target was 99.80. First of all, that it's a psychological level, and there's plenty of room before we get down to this low here. And with the news that supported this move, it was very clear that we were going to see some kind of a reevaluation in this currency pair. The second target was 98.70. I used 99.20 as a stop loss level. There was no reason not to use the 99.20 because the price was going to bounce off of, for example, yesterday's fulcrum or this low here and not go much further, maybe just the 9,900 level and bounce, I'd probably be wrong. So this particular trade only had a 4 pip stop loss. So here we do hit the psychological level of 80. We do pull back up, come really close to 20, and we continue down, and here we hit 70. Of course, sometimes price will continue a little bit further, but as long as I follow my trading plan, I'm comfortable. This particular trade net 33 pips on the first half, and then another 10 more pips on the second half, for a total of 42 to 43 pips. And this had a 4 pip stop loss. Now I'd like to go to the euro dollar. Okay, what you're currently looking at is the euro dollar. This is a 30-minute chart. This is another trade that we took today. I'd like to take it right to the candle that set up the continuation trade. This was the first one that developed outside of this range. By that this was also a T3 pattern, which is another advanced concept, which also helps me to minimize my stop loss levels. So even with the CCI divergence, what I'm looking for is the T3 pattern. The low of that candle was 12. Our entry was 10. The continuation signal candle, which is what you see now, just gave me the confirmation of this trade. So our first target was 56.90. We're getting in at 57.10. I want to get out at 56.90, just before this S1 level. The second target we looked for was 56.70. Sometimes I use major psychological levels or minor psychological levels. Other times I don't. I use or look for a number of a pip distance. And I also take into consideration where my stop loss level is. Now the stop on this particular trade was 57.33. First target is 90. Here we hit 90. The next target is 70. And here we hit 70. We go as low as 68. This also gives you an idea of how long some of these trades can take. So from the entry of this candle, we're looking at about 2.5 hours. Not every trade will work out that way, but in most cases, we're looking at about that. And it also depends on the market itself. It's got nothing to do with me. I cannot control the market. I'm just trying to identify the right move or the right direction and support that with any kind of fundamental or economic data. So there was about 18, 19 pips on the first target, but from the entry of 10 to the stop loss level of 33, we're looking at about a 24, 25 point stop loss, again, depending on your broker. The second target net an additional 20 more points. So we pick up 18 points or 17 points on the first target, and we pick up another 20 more points on the second target for a total of 37 pips from the entry to the final target, with a 25 pip stop loss. So with the 3 trades that I called today with my members, not one of the trades had more than a 30 pip stop loss on this. I do promise or make the guarantee that I won't call a trade that has more than a 60 pip stop loss. But for the most part, they're usually 30, 40, sometimes 45 pip stop losses. So today, there was a total of 121 pips net profit within these 3 trades, and not one of them had more than a 30 pip stop loss. Now you can see that on some of these trades, price continued, but if I follow my trading plan, I'm comfortable with that. Now this was sometimes 121 pips can be an unusual day. It was a very good day. There are days when we can get close to 200 pips. Then there are other days when the market is just in tight ranges and we're lucky to get 40 or 50 points. So you have to be prepared for those days, and you have to understand that it has nothing to do with my trading method. My trading method is going to keep me out of trouble or put me in the path of a big breakout. For example, looking here at the euro dollar, you can clearly see that with this continuation signal candle, this put me in the path of a big breakout. Here was consolidation, this was the breakout, and here was our trending day. This is a big move. Thank you for watching.